Welcome to Raising the Flipping Bar, the go-to podcast for aspiring and seasoned real estate investors. I'm your host, Derek Marlin, and I'm the CEO of Elevation. We're a real estate investment company based right here in Denver, Colorado. We'll dive into smart investment strategies, market insights, and essential tips for scaling your real estate ventures. Whether you're making your first investment or your 100th investment, this podcast is your blueprint for success in the ever-evolving world of real estate investing. Get ready to elevate your real estate game and begin your journey with me. Hey everybody, welcome back to another episode of Raising the Flipping Bar. I'm your host, Derek Marlin, and we've got a great guest today. We've got somebody who's an experienced investor, they're a technology expert, and they're a co-founder of an amazing company. We're also going to talk about the lending landscape. So I know a lot of our students and clients say, well, where the hell do I get the money from? This episode is going to help you with all those questions. We're also going to get some Colorado perspective, but then national perspective, because their company is in a ton of markets across the country. So welcome, Mr. Jake Rome from Backflip.
Thanks. Really happy to be here. Appreciate you having me in. And the partnership so far has been amazing.
Awesome. Cool. Thanks for being here. So what I always like to do to kick it off a little differently is I would love for you to tell the audience maybe a fun fact or something that's just doesn't have to be outside the box per se, but it doesn't have to be business related, like just some fun fact about you.
So this may be surprising or not. I've always been an entrepreneur. My earliest memories are playing in the woods behind my house, extracting all the rocks, polishing them in the rock tumbler, selling them to the neighborhood kids, and then building forts to those same kids. Been in the real estate game one way or another for a while. Those folks, my brother included, are now like praying victim. But I think there's a statute of limitations. And
it's really funny because that takes me back to my childhood. So I'm originally from New Jersey, and we back to open space, and we would do the exact same thing. We would just play. I mean, it sounds old school, but my parents would be like, get out of the house, go play. And we would go play in the woods. Many times we would get in trouble. And sometimes I'd actually have to call my dad. And my dad actually worked literally on Wall Street and on a trading desk. And we would call, and there would be insanity in the background. And I remember him saying, like, do you think I have time for this? You better run and hide. And when I get home, we're going to deal with it. And we would run and hide, and we would play in the woods, and you would see his car pull in, and we're like, oh crap, we're in trouble. And we would parade out, get in trouble. But the woods were our sanctuary too. So forts, dude, I'm down with forts.
Yeah, special place.
Yeah, that's awesome. Cool. So let's jump into the real estate stuff. After you're coming up on 15 years of investment and real estate investing experience, instead of just saying, hey, tell me your background, maybe give us a couple of milestones of your professional journey until we start talking about what you're doing today with Backflip.
Yeah, quickly, the back of the book is even in high school, my dad was a home builder. So I've been in the sticks and bricks for a while. And then coming out of school, worked for a family office based with the U.S. kind of real estate arm, but it was a German family office. We did a bunch of cool projects. I just fell in love with value add real estate investing and opportunistic and value add kind of hairy projects, broken resort redevelopments and multifamily developments, that kind of stuff. And then one milestone was the realization that I also like company building. And so started working on the infrastructure and the models and the analyst training materials and kind of that side of things. Eventually, the CEO of that business spun out, picked about a dozen of us, and we started a pension fund advisory, which we became a registered investment advisor, like institutionalized the inner workings of the family office to serve these pension fund clients, which was my first foray into company building post-college. That was definitely a milestone. And then in between Backflip, what I'm doing now, I had a startup where a colleague and I left. I helped him form a company that was in the real estate hospitality space. So we bought big apartment buildings and then leased them to residents and Airbnb when the residents were gone. So, done a handful of different strategies, gotten more and more entrepreneurial throughout my career. But the common theme is real estate, built environment, technology overlay, kind of obsessed with that Venn diagram.
Yeah. Okay. Well, and you brought up something that I would love for you to maybe define a little bit more, and that is a family office. When you talk about a family office, it's great because you worked in it. Can you give our audience kind of more of a definition of what that is and maybe some of the functionality of what a family office does and why somebody would have one?
Yeah. So a family office is, depending on the size of it, it can be like a type of institutional capital. Institutions are managing money on behalf of others. A family office is managing money on behalf of a family or a group of families. Okay. And a family office can take a little more risk, do little things differently than institutional investors that may be worried about losing their jobs or whatever. Yeah. The family, at the end of the day, there's a boss, and that boss can want to do things that are exciting and interesting and make sense. And things that don't make sense. So you get a little bit more, I don't know if volatility is the right
Okay.
word, but like
Yeah.
family offices come in a lot of different flavors
Mhm.
as compared to institutional investors.
Yeah. And is there kind of a dollar amount or range, when somebody thinks of, hey, it probably makes sense to start a family office? I'm sure it's a huge gamut, but like what would be maybe the sweet spot from an asset or assets under management?
Yeah, that's a good question. I think it depends on what the objectives of the family are. We managed about 800 million of equity, which was just the real estate
Mm-hmm.
component of this kind of Forbes list family. And so I'm used to big versions of those, but it doesn't need to be that. If someone has been successful in their career and made enough of a nest egg to be able to invest that nest egg and cover the expenses of the family on a go forward basis, then I think that counts as a family office. And that doesn't need to be a 60-person organization, which is what mine was.
Cool. Well, and I think that's a perfect segue. So I know a lot of our audience are independent investors, kind of large, medium, and small agents that are doing both investment related business and traditional business, and a lot of contractors and vendors, as we call them, people that we're working with. Can you give us an idea of, all right, so if somebody's out there and they're one of those three buckets, why should they care about what Wall Street is doing or what institutions are doing? Because it's something that's really passionate to me and part of my background. And that's why I was pumped to get you on today. So, like, why should the solo person listening care about what Wall Street is doing in our real estate?
Yeah, that's a great question. And like the short answer is that institutional capital moves markets. And even if you don't think it's involved, it's probably involved. If a realtor is selling a house or a flipper selling a house, they're selling it to a consumer who's getting a mortgage, and that mortgage is tied to institutional capital. So like it's always around the table. If you think about it, I think let's just say $10 trillion is managed by institutional capital. If 10% of that is allocated to real estate, which I think is about right. That's $1 trillion. If they decide that they want to go from 10 to 10.1%, that's $10 billion of capital that needs to flow into real estate almost instantaneously. And so that is one way that just kind of by turning the allocation pie chart dial, they can have a pretty significant impact. The other way, and we're seeing this in our business with value add single family. Most people call it flips. Just given my background, I like the value add nomenclature. That product type is institutionalizing in real time. And that has incredibly positive impacts for folks that are in the game at that moment. We've seen this happen with other asset classes, student housing, self-storage. If you own self-storage in the 90s and cap rates were at 10 to 12, all you had to do was hold it, cap rates shrink to 5, and the value of your real estate has doubled without you doing anything. And so being in something sort of pre and then during the institutionalization moment is a great spot to be. So fix and flip housing, particularly on the credit side, is institutionalizing. And so it's a fun time to be building a business in this space.
So you just brought up something, Jake, that I want to maybe ask you a little bit more about. And I think that's super astute, and everybody should really listen. When institutions or Wall Street or private equity firms or whatever people's definition of like big money moves their decision making by 1% or 10% or a tenth of a percent, that's still, to your point, billions or hundreds of millions of dollars that gets dispersed among, maybe let's just say, the top 50 markets, which we are in Denver. That's a huge effect, and people should really perk up to that, or at least read the Wall Street Journal once in a while or tune into CNBC. Just that's why what we're doing is really important and things to focus on.
Yeah, but being aware, to your point, is step one, and maybe the only step for a lot of folks, but at least you have more context into what's happening in the market. If you think about what an institutional investor is and does, there's limited partners. So LPs, those are pension funds, endowments, sovereign wealth funds, kind of characters like that. Their only job is to allocate capital. And so they have a pie chart and they say, I want real estate to be 10%. I want fixed income to be this. I want oil to be this, right? And they just try to build a resilient portfolio. And then within each of those pie chart slices, you then have the opportunity to diversify more. So like, let's double click on real estate. You can diversify amongst geographies. You can diversify amongst asset classes. So hotels, office, residential, etc. And then you can diversify amongst strategies. So opportunistic, value add, core plus, core. And so all of those things, it's like a 4D chessboard where you're trying to figure out the right mixture. And so people are always turning the dials and single family fix and flip loans, for example, may be the beneficiary of a dial change, right? And so that's what's happening. That's what's happening now. They also importantly aren't investing themselves typically, so they identify investment managers, which would be private equity funds, to execute on these strategies that they have determined they want to be long on. And so that's post family office. I was working for a pension fund manager, and so we were doing value add and core plus deals of all asset classes within the U.S. And so got exposure to that through that.
That's awesome. Well, and the cool thing about that is I really want to kind of drill down into maybe an applicable explanation that you can give us. You did a really cool project of part of your career with a Whole Foods conversion. Can you audience about that? Because I think you set this perfect 30,000 foot overview. Now this is something that you can kind of say, hey, this is the type of project that we did.
That was a bit of a tiger by the tail. So my first startup, kind of after leaving the private equity world, the strategy was to buy trophy, kind of highest rent in the city type apartment buildings, lease them to primary residents, so not take any units out of the housing stock. But then when the residents traveled, we would home share on Airbnb their unit and manage the whole process. And so generating some extra NOI on that unoccupied square footage while the flight attendant is at work for a few days, and then split in the economics with the underlying resident. And so that was the business plan. We were looking at big buildings, small buildings, just trying to get something done. And we ended up buying the Whole Foods building in Union Station, which if you're in Denver, you've probably eaten there or seen that building. I think at the time, it was like a $300 million acquisition. It was the largest apartment acquisition in the state of Colorado ever. Right. When my partner, Dan Cohen, he's a local real estate guy here. He's awesome. Bought that building. And so that was in 2018, I think.
Okay. Awesome. Yeah, that's a really cool experience. And that's why I was so excited to have you on, is you've got such different background from some of our other guests. And I really want to give kind of our audience a different breadth of all the different styles of investing. So this is gold. Before we get into kind of talking more about what you're doing in Backflip, and then we're definitely going to extrapolate this to what's going on in the Denver market, maybe tell us a little bit about what you're personally investing in. Or I get it, you've got a lot of time and energy and money into Backflip, but maybe something that's on your radar if you're not saying this is where I allocate my investment dollars.
Yeah, I try to diversify a bit, but as you correctly stated, I'm pretty, a lot of my eggs are in the Backflip basket.
Yep.
I've got a condo in Austin.
Cool.
That I've owned for 5 or 6 years. We were going to be the equity on developing the condo, and then didn't end up doing it, but I like the developer and like the project. We ended up buying it. And frankly, actually right now I'm trying to sell it because I don't have enough time to manage it. It doesn't even take a lot of time, but it's not actually passive. And I totally screwed it up because we had a tenant that was paying good rent, been there for 3 years. We said, hey, I think we're going to sell this, paid to stage it, get it cleaned up, put it on the market. Absolute crickets. And now we're talking about leasing it again for a lower rent than we had before. So it's a hard game. That's the direct side. And then I put money into some of my former colleagues' deals. They do apartments or industrial development or sort of retail value add. And so I kind of stay close to them and support them and diversify in that way. And then in terms of equities and personal portfolio, I do like REITs. Yeah. I think REITs are very underappreciated. I'm familiar with real estate, of course. I see, a bunch of startups because I'm paying attention to that space closely when it's like buy a fraction of a single family portfolio and all this buzz around it. And when you peel back the layers, I'm like, all right, I could buy a REIT that's tax efficient, liquid, no startup risk, and diversified. Or you could lock money up into a high risky, getting off the ground, non-tax efficient, non-diversified, non-liquid. It's like kind of hard for me to justify that. And so comfortable with REITs.
Yeah, no, I think that's really smart. I think that's something that people should look at more. I come from two different schools of thought. One's more of a Wall Street family on my side. And then my father-in-law was a real estate guy, true and true, with self-storage, with mixed use, with some land and development. And so I have this nice blend of both worlds. And yeah, people, I think sometimes in our real estate space, people get so enamored with the types of businesses we're doing. And we get it, we're in this day to day, but they forget about the market. And you can have that exposure to something like a REIT, and you really gain so much of the benefit without, to your point, a lot of risk. And the liquidity is super important too, to take advantage of other opportunities. You can't lock your money up for 7 years. It's tied up.
Yeah, there's a moment in time, I don't think it's the situation today, where you can buy REITs and yield, significantly more attractive from a cash flow perspective than investing in the real estate itself. Yep. This is true for more stabilized or core properties. And so If I was still doing institutional investment management at that time, I'd say, why would we buy this apartment building when we can just buy a REIT that returns more and has all these other benefits?
Yeah.
I think it's tougher to do that in value add. So people that are doing fix and flip projects, like you're not going to beat those returns on a well executed project by buying REIT shares, but something to keep in mind.
Yeah. Well, and before we dive into what Backflip has going on, is there, you're obviously a student of real estate, you're a student of the market and investing. Is there something that you do, whether it's working on your business versus in your business, that you can kind of maybe share with folks? As we've got other entrepreneurs out there of what they're doing. You're busy day to day, but is there something you try to zoom out and say, hey, I'm kind of trying to think of on the business versus just down and dirty in the business?
Like, that's hard to do. You mean like just kind of learning generally, or
Maybe just learning generally, or whether you call that personal development or things that you're trying to better yourself with, that of course hopefully translates into running your business and running Backflip.
Yeah, I think consuming content and being very open-minded about the type and sort of breadth and depth of content that is consumed is a good way to just continue to become more well-rounded. Example, I'm naturally an equity investor, but given what we're doing at Backflip at this stage, we're credit investors making loans, and it's actually a completely different mindset shift. In credit, it doesn't matter how, there's no upside, right? Like all you can do is get your interest and loan back. And so it becomes more about avoiding losers than it does picking winners, which is just kind of an interesting mindset shift. A venture capital model, for example, is going to invest in 10 companies and knows that 8 of them are going to go bust.
Right.
And one of them will return the whole fund. And they don't care about the 8 that go bust. Well, they care about the founders and all that stuff. But like from a financial perspective, that's the model. And so I've been trying to get just more familiar with how credit investors think. Recently read a book called The Price of Time by Edward Chancellor. It's a great book. It's the history of interest, basically. And so it's kind of start to today. And then podcasts like Howard Marks, who runs Oak Tree, he's been putting out an awesome memo for decades now. There's a podcast called Behind the Memo where he dives into all these concepts. Apollo's got a pretty good podcast with Torsten, their chief economist. View from Apollo, I think it is. So just, trying to stay when driving or mowing the lawn or whatever on top of what's going on.
Yeah, that's awesome. So let's shift gears a little bit and let's dive into Backflip. The great thing is that people that are already in our community know Backflip. We've worked with you guys we're now starting on our 6th project with you guys, but can you give us kind of an overall summary of what Backflip is right now? So everybody goes, oh, okay, I know exactly what you're talking about.
Yeah. First of all, thank you for being a customer. You're one of our favorites. We can't say the favorite because that would offend somebody, but like you're the poster child. So it's been awesome. Backflip, put very simply, our mission is to empower local entrepreneurs to rejuvenate homes so people can love where they live. The tailwinds to the business model are undersupply of housing, aging housing stock. That doesn't get as many headlines. But if you think about it, like homes on average are old and obsolete and unaffordable because of the first thing. So it's a pretty clear problem. I've always said when I want to pursue a business, it's going to be something that's on Maslow's hierarchy of needs. Like everyone's got to live somewhere. That need is not going away. And so by executing on our mission, it's very fulfilling, both in terms of what we're doing to helping facilitate into housing stock and the positive impact that has on families in the built environment, also supporting these entrepreneurs, which are part of this creator economy that's really interesting and really just getting started, I think. So that's our customer. That's what we're trying to do. We do it by providing a couple of different types of products today. Technology products and capital products are kind of the 2 big buckets. And then we really focus on community too, which we haven't productized, but it is really important in this space. And we can talk about what that means. On the technology side, the easiest way to think of it is like Zillow with investor goggles. So very data heavy and trying to give our customers, we call them members, the data at their fingertips. It's a mobile app. So in the palm of their hands, what they need to make a good investment decision and to look at a significantly more number of deals than they were able to previously. The old way of doing things without Backflip, you write down the address, you go home, you open your spreadsheet, you open Zillow and Redfin, a few different tabs, and you try to like put together this comp set using tools that are frankly built for consumers, not built for investors. And so we wanted to build the investor version of that. We wanted to give that away for free, which is what we're doing.
Which is awesome.
We monetize on the capital product side. So we then have a pretty seamless, like the deal, fits your buy box, apply for a loan. There's a digital loan application experience, and then we fund We fund the loan with our own capital, and then we deal with it on the capital markets on the backside. But that's how we're generating revenue to grow the team. We've gone
Yeah.
from just two of us, my
Mhm.
co-founder Josh and I, in late 2020 to there's close to 80 people on the team now.
Wow.
So it's becoming a bit of a machine.
Yeah, it is. Well, it's been great for us to work with your team. You've got great marketing staff. You've got great underwriting staff. We're working with people all over the country. Maybe talk a little bit about the markets that you serve from a lending perspective, but even just dip into, you're right. If you've got 80 people, you guys are all over the place, which is really a cool way that business is now getting done. It'd be nice if they're all just sitting in a room in Denver, but that's not reality anymore. So I'd love maybe hit on those two things.
Yeah. So from a markets perspective, fortunately, this loan type, business purpose, non-owner occupied,
Mhm.
those are two keywords,
Yeah.
is not nearly as regulated as a consumer mortgage. And so we're able to get to most of the country, to most of the rooftops in the country
Okay.
without having to cut through a lot of red tape. So we're in about 43 states now. Colorado is one of the top 5. Texas is number 1.
Nice.
Florida, Ohio, Tennessee, a few others tied for 2nd through 5th.
Okay.
But we like Denver and Colorado a lot for a lot of reasons.
Yeah. And what's maybe as of last year, what are the number of loans that you guys have done overall?
Yeah, we're doing north of 100 a month
Nice.
at this point, which is about $30 million plus or minus, depending on loan sides. So I remember we did in 2021 when we got started, we did like 4 million worth of loans.
Okay.
2022, we did 35 million. 2023 was 135 million. And now we're approaching 200 million, and we still have the fourth quarter to go. So it's been well received by the market. And partially what's really cool about this business is repeat customers like yourself. So if you're in a consumer mortgage space or doing any real estate prop tech business plan where there's a retail buyer at the end of the chain, you're spending money to find that buyer, you're developing a relationship with them, you transact with them, usually just one time.
Right.
And so that results in a lot of things. Like one, they don't really have a true product need. The most important thing is pricing. It's not the relationship. It's just you treat the customer differently. From our perspective, our customers and our repeat customers are like just amazing. And so like we work really hard to build and maintain good relationships and to provide value to them in everything they're doing from beginning to end. And so that's something that we've always known to be true with this business, but as we've gotten into it, it's pretty magical.
Something that I'd love to kind of like talk a little bit more about is you talked about the consumer side or the client side. You're running a great remote business. Maybe just touch on that a little bit, because we do have a lot of entrepreneurs and people that, yeah, they use real estate as a way to generate wealth, but you guys are doing cool things on building a business too. Just tell me a little bit about that.
Yeah, that's been, appreciate the question. That's been really interesting. I mean, we started in 2020, so it was remote from day one.
Yeah.
And Josh, my co-founder, and I are in different cities. He's based in Dallas. So the way that we communicate is remote.
Yeah.
And so that's enabled our culture to be set up in a way, I think of it as like an operating culture that is remote work is productive.
Yeah.
We don't email each other internally, which like I tell people and they're like, how does that even possible?
Yeah.
We use Slack, we use instant messaging type tools. We work within docs and projects themselves. And we do a lot of video recordings and audio messages. And it's just like a whole reprogramming that people need to go through when they transition from working usually anywhere else into a Backflip environment. That said, it's been quite successful. We've got folks in, it's probably approaching 40 states at this point. So you can't really put the toothpaste back in the tube. What's really interesting is you mentioned like, if, it may be nice if everyone was here in Denver, and there's some truth to that for certain things.
Sure.
Everyone would be quite like each other. Yeah. And what we found with hiring remotely is the backgrounds and perspectives of people is really unique and different. And we've got people in, Kansas City to Napa Valley to New York City. And like, it's just a really interesting and awesome group of people. We did during a stand-up yesterday, I think, a prompt, what was your first job? Mm-hmm. And, in my old world, the first job would be like investment banking, McKinsey, like just like 5 different things, right? Here, it's like Amazon fulfillment center, or like a veterinary clinic, or like wrote poetry, like just completely all over the board stuff. I thought it was really, really cool.
Yeah. Well, it's cool you say that, because one of my first interactions with part of your team was Mariah from the marketing perspective, and she does an amazing job. And then I saw where she's, working from, Bozeman, Montana. I'm a fellow Fighting Bobcat. I went to college there, and I was always a little jealous because it's like, damn, you go there, and this is a long time ago, so it's dating me, but there were no job opportunities. Now you can have somebody who's a super smart person adding value to the company, living in an amazing part of the country that I wouldn't move from back in the day had I not had, unfortunately, not as many opportunities. So that's really cool.
We've now got two people in Bozeman. Mariah, who is absolutely crushing it. I think she does like 200 events a year or something like that. Awesome. And then Richard, who I'm meeting after this, he's flying down for a day trip. Richard runs capital markets, and we joke. It's not really even a joke. We operate the largest trading desk in all of Montana. So yeah, that part's been fun. It's a different challenge, right? Like you're solving a problem for our customers, and then we're also figuring out how to build a company of this type remotely, and there's no playbook for that.
Gosh, this has been such a great episode. We've got Jake with Backflip. And so I actually have a lot more questions. And so what I'd love to do is wrap this one today. We're going to come back and give you guys a second episode. We're going to dive deeper into what Backflip is doing on a day-to-day basis and also dive into the Denver market. So stay tuned for episode 2 with Jake from Backflip. Thanks for tuning in to this week's episode of Raising the Flipping Bar. If you found value in our insights and stories, let's keep the conversation going. Connect with me on social media and be sure to share this episode with friends or colleagues who might benefit. Your feedback and reviews help us grow and reach more listeners like you. So please, if you enjoyed this episode, leave us a review. Thanks again to the Elevation Academy for sponsoring today's show. If you're interested in learning more, click the link in the show notes below. And remember, every property tells a story, every deal brings a lesson. Keep reaching for those goals, and we'll catch you on the flip side. Hey, everybody. Thank you so much for listening and watching Raising the Flipping Bar. Just a basic overall disclaimer is that A, this is not legal advice. B, this is not tax advice. C, this is not financial advice. I hope you get the gist, but I'm obviously not a lawyer, not a CPA. Hell, I'm not even a real estate agent, actually. But in general, we hope you get a ton of value out of this, but there is a bit of a disclaimer. Please consult a professional if you have any questions whatsoever. Thanks.